Hello. Welcome to Or Plus. Past 2 days have been pretty eventful. Pretty eventful. I'm not going to sugarcoat this. We're going to go off of the previous video I made on this channel, the insightful video, right? Because I have it pulled up in front of me. Someone else's experience. I've had multiple research binges on learning auction market theory, what it can do, and realistically how can I implement it to the chart. How best can I do this with very little context outside of the strategy I know, and of course what little bit I know of market theory, auction market theory. Um, I understand the key differences between balances and imbalances when buyers and sellers agree on a price range and stick to that price range, balance. And when events happen that occur, like someone breaks their phone, now it's worth less, imbalance. My new task, my new goal per auction market theory is learning the signs needed to catch the change of trend or the move, the shift from imbalance to balance, and then vice versa. So that way I can better take a trade without losing as much. And per the strategy I've learned from TJR, it's a little bit more of a it's a it helps me better understand what I'm looking for a whole new set of criteria before I attempt to take a trade based on simply a key level getting hit and then missing out the majority of the move, because price could change right here in the blink of an eye. Yes, yes, this was pretty cut and dry. Imbalance, balance, imbalance. That part makes sense. It's right here that's a problem for me. 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 Understand? I can go into each one of these points right here. For instance, we were in a downtrend right here, right? Per TJR's words, we broke structure here, fair value gap, enter, boom. We could have caught this whole from like right here all the way up. Realistically. We then plateaued. We found balance in the market per auction market theory. We didn't break structure. We stuck within a range. Boom, we broke structure. Closure below that low. Again, TJR's words. From there, same story for value gap. Take a trade, catch all the way down. We didn't exactly hit this right here, but we did move down in price. We then plateaued again, made a new range, balance. Okay, cool. Event happened. Boom. On the 24th, news. This was literally all of this was news, all the way down. Caused market to move lower. Don't know why, it just did. Outside of it being news. From there, plateau. Again, right here. Boom. I'm now seeing price move low again. It's currently what I'm seeing. So now I've got to figure out the signs to better catch wind of from here down outside of break of structure. So the end result is right here I can take a trade and we see it move down. And I could be saying the same thing twice. Really could be, because TJR strategies use inversion tools, indicators that I could apply in real time to the chart to better catch a trade in the first place, right? But it's under the context, under the guise that market's going to continue in the direction it is, or because it has continued in the direction it has, we're automatically going to be reversing regardless. I think that's a good point to start with, in my opinion. I think it is. Because coupling the two together, we have plateaued here. We had a well-defined range all the way through this. We recently broke that range here and are continuing down. Okay, now we need to figure out if price is going to respect the break and continue down, or if it's going to disrespect and come back up within the range, stay within the balance. If it stays within the balance, we know it's just going to continue until it breaks again somewhere else, and then we'll have to wait for that test a second time to see if it respects the range. Outside of that, it'll need to either continue based on what it's done now or bounce up within. That is I think that's what I need to find today. I think that's what my goal should be today. I've marked everything I need to for the high time frames to really understand highs, lows, trend, the like. Now I need to figure out not trend, but where market would want to go from there. Because we have sets of liquidity all the way up through this. But if market, assuming it's going to continue on down, wants to continue on down, the next likeliest spot would be right here, this low. Super strong drawn liquidity, super strong area of imbalance. We had very low volume though, and that's what's deterring me from saying it's targeting this. I don't know if it will respect this level entirely. It's closed up the fair value gap here pretty well. It's hit every single low on the way down so far. This right here was an area, a plateaued area of balance, right? Same story here. We had some serious bounce issues. We had an event, move up a little bit, not so much balance, but we'll consider it balance. Another imbalance here, plateau, and then boom. September 17th hit. What was the 17th? We're going to use factual news. That was an FOMC. That was high impact. Very high impact, apparently. And because of that, we're seeing what price wants to do. This came down and swept past all of the fair value gaps here. Created a huge range for price to manipulate. It went past. Maybe we could see it on a higher time frame, maybe a 4-hour. Major indecisiveness, FOMC, cool. We broke past that range. Plateau, event. This would have been a plateau. News forced market higher. Okay. It swept past the lows to continue higher. From there, we see more so plateau, balance area. Event, plateau, event. Price can come down, hit this. What about I wonder if that looks the same on the, not the hour, the day. We would not have broke structure there. No fair value gap there. That's a pretty well defined up down move. It respected this. Continued higher. I think this is a mode of rejection. Because we had major indecisiveness. News hit, and the majority of this right here was a complete doji. And then from this move up to this move down, right? Price broke out the range previously established. It held that range for a little bit. Created an all-time high, plateaued, balance. Cool. Relative equal highs up there. Price could target these per TGR strategy. There is a potential for price to disrespect this range and continue higher. there's also a potential for price to respect this range and continue lower. And now I think I know the job a little bit better now. I think I do. We're on the hour. We're on the 30. What's going to tell me it's respecting this range of this? Is it this range? Yeah. It's coming down. If it sweeps past that low, it might continue lower. There's really no other room outside of that for it to hit except for like this right here. And this is like, these are the next stops on the way down, and there's like a huge, that's a fair value gap right there. Let's go ahead and bring that over here. Why am I marking all this? There's no way price is going to come down this low today. I don't know that, because in the same span of time, 30 minutes, we saw a move like this. An hour, we saw a move from this high all the way down to this low. So there is a potential for price to just continue to tank. And we know that from where it is right now, there is two lows. There are two lows. They have this low here, right? And this low here. Now I got a better question. Let's go to the 5 minute and see what we're looking at there, because it's just continuing to tank right now. We see where price is per the red line. We want to do this. What could price be targeting? Well, there's a fair value gap right there. This is the most recent low outside of this right here, which is completely plausible. We have plateau, balance, event, cool, plateau, event. This is FOMC, just so we're on the same page. The reaction based off of FOMC was to go higher, which is completely understandable. I don't want to go lower than the 5 minute. I want to take a look at this and just really observe. I see where price might want to go and where it needs to cross to continue, I think. And then based on this and volume, I think I can make an educated guess as to where price might want to go after. But I want to see with my own two eyes what price does before I take a trade. Because this is new. I've established a range price has to respect, and it can go all the way down to here, wick, close, and then bounce back up. But if it decides it wants to continue and close here, it'll just continue to tank. And that's entirely possible. I might miss a trade today. I might miss the trade today. I might miss this whole move today. We might see a plateau as soon as market opens. I don't know this, and I won't until I see it with my own eyes. Today's high impact news, I imagine we're going to see something a little crazy today. And the majority of it's already hit. Holy crap, that changed. I think you guys saw it the same way I did. Let's take a look at this. Greater than forecast good for currency was. Less is good for currency. It wasn't. Good. Greater is good. It was. Greater is good. It was. Greater is good. It was. It was. And we have one more folder at 10 a.m. Greater is good. We don't know yet. Forecast was lesser. The majority of this was lesser. This was greater. This, and this remain the same, all of which went up. I imagine this will repeat and do the same. We'll see a higher number here. If the greater, yeah, greater is good, so it should push price lower. I think we're going to see a reaction within this range. I think we are. I'm moving that low because we're still within London session between 9:30 and, of course, 3. I want to really pinpoint the low so that way we're prepared. Let's go ahead and take this high down here. This is the 30 minutes, so that high is valid. This is our range, closing range of London, and now we're going to see what the not the opening range of New York Exchange, but we're going to see it open and determine from there what to do. Right now, there's a lot of volume in the market, and it's pre-market. Price is moving down, and news has hit, so this is expected. What in the world? That says 8:30. I thought this right here said 10. I am wrong. Big oof. That's 8:30. It's 8:53 now. Market opens at 9:30. I've got a little bit to really pick up on stuff. Looks like I'm going to pause the video, update, and then from there we'll continue. Before we do that, let's go to the hour real quick. Because NASDAQ is doing something a little bit weird. Just a little bit. That's a fair value gap. And this is the low outside of that same range. Okay. Same story. Move up, plateau, move down. This is around the same time FOMC hit. Cool. You can go to 30-minute now. See where price is for value gaps. We have, unlike the previous one, a low there, a low here, giving us more of a range to really hit and respect. And then the next most recent low is right there. And then we'll go to the 5-minute to really dial in. Low, low, low. The value gap. It might continue lower based on NASDAQ. For value gap there. For value gap here. For value gap there. There's a whole slew of confluences right there. It could hit, target, and just take out completely. Not seeing anything. I don't know. No. Outside of this low. It also pairs up with this right here. We have relative equal lows. So not this one, but the one below. Relative equal lows right there. Super close, but not exactly the same. Still, though, worth taking a look at. We've been above that margin the whole time. The general trend is up. Nada. That's the way these charts typically work. It's up for the most part. But right now, we're looking at price tank. And we have a range, a well-defined range, where price could come within, bounce, and then continue higher. I'm going to go ahead and pause the video real quick, let this update. We'll be right back momentarily. Okay, so we're now in market open. We're looking for a few things. Continuation of current trend and or another confluence saying something else outside of that. We just had price manipulation there. Same thing on the hour. Yes, that low. S&P does the same thing. Has hit it. I don't want to rush into this because one, we broke structure, NASDAQ, or sorry, S&P. I meant to point out TJR's strat, right? We broke structure, technically reversion there. Reversals signify trend shift. We were in a downtrend. This is kind of what I expected to happen. Did we get break on both? Yes, we did. So SMT is out at the moment. I'm waiting very patiently to see what happens. We either get a fair value gap that confirms continuation, or we don't, and the end result is we get consolidation. Consolidation is market value area. From there, it's a question of when will it break out, and will it break out within this range? If not, I think I'm going to pull out today on trades. We have one news folder. Hits at 10. The expectation is that it is falling in line with the rest of... can you skip now? I don't want to look at this. I'll look at this. The expectation is that when that folder comes out, we're going to see a move down, similar to what we have been throughout this right here, right? Because all of that hit at 9:30, not 9:30, 8:30, right there, and it's a major move down. So if it's higher, we'll see it move down. If it's lower, we'll see it consolidate. If it consolidates, again, we're out. But this signifies trend change, reversal, actually. We created relative equal lows. It pokes below, reversal, sweep. So inverse for value gap. We could see this consolidation right here as the fair value area. And because this is market open with higher volume, we could see it continue higher. Right now, I'm trying to pinpoint where price is making that focal point. So when I go to take my trade, it is not mid-move, but it is on the cusp of really jumping away from where it is now. I understand that this is not really consolidation. We can't really count it because the most recent high and most recent low haven't been respected, and we are at the moment currently going off of previous context being we were in a downtrend, we broke structure, we have a fair value gap, and that just now, based on relative equal lows, price on the ES just dropped below those lows, and NASDAQ has only just made one other low. The other thing coupling the reversal confluence is an SMT divergence between this low, and on NASDAQ, this low and this low. NASDAQ created a lower low while the S&P created relative equal lows. Ow. We had a higher low on NASDAQ first and a lower low on S&P per my notes on SMT. If NASDAQ creates in a downtrend, it's based on highs. So here's one high, here's two high. S&P's got higher. The highs are the same at the moment. So I think I'm wrong with these notes. They're good to look at, but they are distraction. They overcomplicate this just a little bit. We are going to wait for this candle to close. That'll be a fair value gap. We have manipulation. We need break of structure, inverse fair value gap, something like that. We had break of structure here, order block, move down. This disrespected the order block, making this the new break of structure. after key level manipulation on the 5. Now we're waiting on continuation, which looks like it is what we're going to get. I'm very... I have two problems. As much as I want to take a trade today, I'm looking at this range. And this right here is concerning. This is a fair value gap, I think. Either a low... No. That is a fair value gap on the 5 minute that price could be targeting. In which case, my final take profit could be right here, and this would be a successful trade. And I could be wrong, and it just continue barreling through, hit this key level here, and then it just take out all of that. So I'd be trading with trend at this point. Which means small is better to avoid getting caught by spread. I want to wait for this candle to close to confirm this for value gap, and then I will enter and watch it continue. But I want my stop loss. Why would price come up? Order block. Although this is the rejection, I think. No, it wouldn't be rejection. This is a difficult thought process. I think we're going to continue much further down, and it's going to target that low. We have news at 10. We have 20 minutes till then. We have fair value gap. We're going to do this. based on that fair value gap, I am taking this trade. This is on S&P. My end profit is going to be roughly right here. It's good RR. Why am I taking this trade? Why did I take this trade? Why is this even a thing right now? Why is it? When I've considered this right here to be a possible reversal point. Because we're in a downtrend. Auction market theory says if we're in a trend, assume that it will continue in that direction. We broke structure temporarily, sign of reversal. But per market auction theory, once it's broke structure, it now has an established range to respect. It either continues after breaking structure to bounce within the range consolidating, or the auction, the current trend, is not over. And as a result, the thought process is price will continue. Well, what's telling me price is going to continue? Referring back to TJR's strategy, breaks of structure are signs of trend shift, that it has a potential to shift, not that it necessarily will. So, from that break of structure, key manipulation, break out of range from session, right? Based on that time frame, we have break of trend and then the break of structure, but without retest. The continuation confluence is the stacking of fair value gaps, allowing me to assume price is going to continue to drop. Because it is continuing to drop now, I think my idea is valid. I am trading with trend in this instance, not a reversal. Ergo, the thought process, beginning, middle, end, because we're in a downtrend. We broke structure. It was a potential retest zone. We saw, not an SMT divergence, but the BOS. It was a reversal confluence with minor, very, very subtle on the low side SMT divergence here. And I took note of that. Both are creating lower lows, but one is creating relative equal lows, making price, in my opinion, continue lower. It's created an area where price can target to continue lower. From that, after targeting and sweeping those lows, it's created a fair value gap. Fair value gap. We could see price continue lower. Okay? Following auction market theory and the end result of it being applied alongside TJR's strat, I think price is going to continue lower. How much lower? If it stops here, I will be satisfied. If it continues down here, I will be very satisfied. This is going to be the de facto, I'm taking half out. This is where I'm going to let profit ride. I want to see what happens. I really, really do. We entered with 0.25 lots. Half is, in my math, it'll be just under half. So it'll be 25 down to 12. Over would be 13. So 13 I'll let ride to that bottom. And before I let that ride, I'm taking 12 off to get that number back. I'm actually curious, are there any other confluences in this range right here? There is this low right here. We're going to keep that in check. This is a liquidity draw here. There's a potential it'll hit this and bounce up, but I'm inclined to think it'll actually hit that before anything else. So far, the trade idea is correct. Let's see what the 30-minute has to say real quick, because Yeah, 30 minutes, roughly the same. We had this plateau here, and there is a difference between the highs here. Price is continuing lower. It is right now continuing lower. That's what we want to happen. From there, we see it dropping, dropping, dropping. Nothing saying reversal, so auction at the moment is valid. We see price dip past this here. It's cleared that fair value gap completely. From here, we watch and learn, pay attention very closely. Because we entered based on this fair value gap and that it is the continuation confluence needed to continue to drop on down. We waited for this candle to close to give us this key level manipulation validation. It gave us a second fair value gap. Price should continue lower. Hello, news. We have 9 minutes till it'll be a minute. Okay. Consensus of value per volume. Okay. So that is what constitutes acceptance. When price defines a range and the volume is high within that range, staying within it. That's the acceptance sign that price is at a fair value range. How to read that? High volume. So big candle, big blocks here on the MACD, and very choppy price action within a specific range without breaking above highs or lows, staying within that range. And then point of control, let me find. Point of control is based on time frame. So point of control would be towards the bottom of it. I think this would be where it'd mark because we had the breakup structure here. So point of control where price manipulated something within this to continue price downward. Market makers, algorithm, whatever, manipulated something right here to continue price lower or to shift trend. That's the whole point behind breaks of structure. So point of control, and based on the rules, if it's a strong reaction to that point of control, it can disrupt the flow of rule 1 into the balance. It's likely to revert to the other side, but price often retreats to the edge of the balance area before traveling to the opposite side. So man, that is a cross reference for me if I've ever read one. If there's high volume and choppy market, it has a likelihood of reversing to the other side. Price will then retreat to the edge just before traveling to that opposite side. It'll slowly trickle up and then break out without breaking all the way up, and then boom, right? Remember, the acceptance is high volume with choppy price action. So there's that. Outside of that, we have rule 4, which breaks rule 1. And then rule 5 on a furtherance of rule 1. So 4 is the direct opposite. If it has a strong reaction to the point of control, it can reverse almost immediately after. It can disrupt it completely. But the continuance, the thought process, if after acceptance it stays within a range at the edge of the point, or not the point of control, the balance range, if it stays at that edge over enough long span of time, it could continue into its current trend. So we didn't get a strong reaction to the point of control. The point of control was valid through the SMT. Fair value gap, everything else lines up with the confluences needed. Separate that out. We now have widespread over an overarching trend that is generally correct. The point of control was not a strong reaction to. Instead, we got exactly what I'm looking at rule 1, where it came down, retested an area, and then continued. We are now outside of that range. It's going to continue lower. I think my idea is correct in that we are going to see it hit this, but we have to wait and see. 10 is news. We need to see what news does. That's an event. It has happened. So green, good. Greater than forecast, good for currency, cool. Data leaked 13 minutes earlier than scheduled release. Hasn't been confirmed. Upon release of official source, it might change. So this was a press leak. So we need to take a look. Yep. We're in trade though. Let's see what happens. It says good for economy. It says good for market, sorry. So if this is the case and the previous news after it was all green dropped price, we could see just that if it's the opposing side of things, right? That number could still change. We do have a range, I just realized. Something to note as well. We're in line with the strategy on Reddit that I found elsewhere. Not the AMT, not the orb strategy, but separate one. I showed you guys earlier in another video. At least I think I did. Man. Okay. This is a retest of said area. This would retest and then drop lower. Breaker block. Looking at two examples right now. One shows where a downtrend falls below a range, comes back up, tests, and then continues to drop. The second one is where price comes down within range, comes up within range, and then goes back down into it. That's the point of acceptance on high volume, right? But single prints, I'm just now learning, are these low volume areas, right? And per these, we have a little bit of a different take, false signal type take, because high volume with volatile, choppy price action equates to balanced area. But without high volume, choppy price action will then lead to the continuation of trend. Unless a point of control is reacted to strongly. And that particular point could be where price reverses, per auction market theory. There are 4 instances of reversals on TGR stuff: break of structure, inverse for value gap, SMT divergence, and 75% extensions. 75% extensions, I think, fall in line with the ending signal to auction end, where a balanced area is swept above in an uptrend, and that candle not only creates an SMT divergence per the chart, but it also leaves behind a trail showing price was moved past and was rejected quite swiftly. And from there, we got the reversal. Aside from that, we also got this is when you know you're thinking too hard, your brain just stops and you don't get to think about this anymore. I'm trying to get this right. I think this is going to be a breaker block. We're going to get stopped out. Big sad. Spread's going to get us, I think. My question is, where was the point of not control, but where was the balance at in this? Or is this the reactive response, the reactive traders coming in? Because different actions for different things. Things are too cheap, so price is typically going to be driven higher. Duh, that makes sense. There doesn't necessarily need to be a point of balance. There just needs to be a point of control. And then from there, why did my music stop? Yes, I'm still watching. Stop pausing. I need to review the range on auction market theory. Because it's not opening range. We could be seeing acceptance, actually. We might be seeing acceptance here. Because price was driven down to a point, and from there we are currently looking at price sitting within a range. It's wicked above the previous high. Two highs now. If that range is valid from this high right here to this low here, and we've seen price up, down within range, right? Bounce all the way up here, wick above. This could be signaling that whatever range was established here was just ended. It's over. And that is currently going to start falling back down. We've been in a downtrend for a while, though. A while. Hmm. Was confirmed. This was higher. And I was stopped out. It was released and that happened. So it was an acceptance. That's unfortunate. Big unfortunate. TGR strat worked. We waited for manipulation after market open. That was valid. For value gap low, enter. Yes, we could have waited for the 1 minute. That would have been very risky. The confluence is aligned here. We were in a downtrend. Continuation was what we were looking for, and so we took a short. Based on that, we should have been A-okay. This is where things get confusing to me outside of learning auction market theory. Because per TGR strategy, it's a fluke, it's a manipulation, it's a reversal, it's something having to do with market. I'm not entirely sure how he explains it outside of we had a break of structure, there was an order block formed. It was disrespected, and so price continued lower. That's what it did. We saw it do that. Okay? But because it was disrespected, we got a second break of structure, a second order block. That order block was not retested. Instead, we got a move up, came within, and then a price gap. This price gap is the result of press leaking information before it was out. And the result of it leaking and the assumption of other traders not entering or not participating, and that difference in price coming out, and then from there, us getting stopped out because of this. Because of market movement after the release for the confirmation. That explains why it stopped in place, was because it was being released right there. And because of the press release, no one wanted to do anything until we saw the number, the confirmation. I understand how price gaps are formed now. I don't know where that came from, but okay. There's little, I guess, dust. I have no idea. Anyway, the theory, my thought process into trading today was valid. It was. Curious to know though. Okay, market is an unbalanced trending state. I'd call it that right now. I mean, it's gone down a lot. It's broke structure recently. Twice. 3 times now, actually. We broke here above this high. We broke here below this low. And then we broke here above this high. 3 trend shifts in a row. Choppy price action. So from this high to this low, range defined. Return to value. Okay. So, okay. So, how to learn something in a very short span of time. Understand what you know and then apply. The same terminology with the same definitions. Different terminology with the same definitions. So the understanding between the two is a little bit crisper, I guess, right? Imbalance. We started with that. Downtrend. Okay? A strong seller pushes market lower, leaving behind a trail of low volume areas. Low volume is indicated by these white, lighter colors all throughout, right? All of this. See how much there is? A whole bunch of low volume. The market is an unbalanced trending state, not a downtrend. um, Failed initiative. The seller's aggression runs out at a new low. Here's a new low. Let me guess. SMT? No. No SMT. It created a low and ran out of juice. It just could not go lower. Market stalls. We saw that up here after the low was created. It stalled here realistically, but we saw it for news up there. Responsive trading. Buyers seeing the new high as overpriced, step in, push the price back up. This is the first sign of responsive trading, responsive activity. Price then returns to value from the previous day's value area, filling in the single prints left by initial trade. Single prints are the low volume with high price action, right? So low volume with extreme volatility. New balance. Once back inside the old value area, trading activity increases and the market begins to consolidate. The trend is over and the market has returned to a state of balance. So, based on this in particular, we had a trend up to a certain point. It ran out of juice down here. The first sign of responsive activity would have been the break of structure after. After the break of structure, we could have then applied all of our confluences in the opposite direction. I made one mistake here, and this was defining two key ranges to really depict where price was wanting to go. What it was not targeting. I need to get out of the habit of saying that. I need to find where price was going to end. That would have been where the stop loss was. I think we'll see it on a higher time frame. Excess break. There. That's NASDAQ. Let's see what this does. Yeah. Same candle issue. So and I should have seen that coming outside of everything else. We had relative equal highs right there. Price pushes above them, and then from there, this trend's over. Giving way to the reverse. I think I'm doing a little overcomplication, just a little bit. I filled today's trade. No biggie. I still have 3 days remaining. Friday, Monday, Tuesday. Let's take a look real quick. Friday. For trading, I think Friday. Monday we can take a trade. Tuesday we can take the trade. So we have 3 days remaining to get the account back in the positive. I think I can do it. I need to do a little bit better job at finding price and really narrowing down where I think price is going to go based on recent price action and not just trend and theory. That's 10:30. We're out of trading today. If you enjoyed today's video, I understand it was a bad one. I understand the loss really hurt. I've recovered from this before. Just so on the same page. You can see all the red. You can see all of the red. I don't know why it's like this. Why are you like this? Thank you. Started with 20, had all this up, right? We went down, 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 down a lot, down a lot. It wasn't really, it was right about here where I started picking things back up. And at the end of this, we were right where we needed to be for the month of July. And then August came around and we continued that. So I think I can get this to work. That was a $4 difference. We're working with a $5 difference now ish. What's the lowest point? 16.5, 16.4, 3.48. So right here was the lowest point for us. That was roughly a $4 difference. 3.57. So $3.57 compared to right now a $5.25. So this is the largest margin in the shortest amount of time that we have had to really recover from trading. Stressful, yes. I knew the risk going into today's trade. I implemented a new strategy-ish with a better, firmer understanding on what trend wanted to do. And today was more of a back test as to really what I could identify. Tomorrow, what's going to happen tomorrow? Tomorrow, I'm going to take a step back from auction market theory for a second. I need to reacquaint myself with TJR's thing, as well as my general thought when it comes to looking at a chart, trend, all of it, right? Not relearn, just reacquaint mid-trade. From there, we'll attempt to take a trade. And hopefully, we'll have such luck to reverse this now negative balance on our demo. We're still up for the 3 months. We're still up $17.52. This needs to be reversed. And I think I can do it in 3 days. I think I can. I'll see. We'll see. If you enjoyed the video, give it a like, give it a thumbs up, subscribe if you're new on the comeback. I know it was a bad trade. I'm going to recover from it. I'm going to have all the fun in the world doing so. Thanks for watching. See you next time.